Hi, it's Alfred giving you an update on select income. The past quarter was less interesting for bond investors. Return was mainly driven by the yield, and in the case of the Canadian Universal Bond Index, that was 0.4% return. Select income performed better due to exposure to corporate bonds, gold, and stocks. I was surprised real estate did not rally as leverage has to be one of the best asset classes in zero interest rate and money printing environment. I want to highlight the consequence of aggressive spending by governments. As you could tell, Canada's deficit to GDP is very high as a result of spending to combat economic drag due to COVID. This trend will continue into 2021 and probably 2022. The problem is that eventually needs to be repaid. The Liberal government has said they will target the wealthy, but without specific information how they define wealthy. Generally, they mean three groups of people: high-income earners, asset owners, and spenders. Since marginal income tax is already over 50%, we don't think there's much they could do to the high-income earners. I suspect our government will target the other two groups, effectively the retirees. This is additional burden to the retirees who are already receiving very little income. Select income is an ideal solution for investors who need to beat inflation after tax. It is invested diversely with risk properly offset. For example, interest rate risk of fixed income is offset by owning stocks in gold that will likely perform well in inflationary environment. Effectively, we chop the tail risk of every asset class that we own. Currently, we overweight stocks, corporate bonds, underweight government bonds. Within stocks, we prefer real assets such as real estate, infrastructure, and gold. Thank you for listening.